Okay, so we're going to start. So very good evening, everyone. My name is Ashok from Kenanga Futures in Amberhat. Um, Let me just start the recording as well. For your information, today's session is a joint collaboration with Chicago Mercantile Exchange Group, CME Group as you all know it. And for the month of May and June, CME Group will be organizing a series of partner events and market education to mark their fourth annual CME every month. Thus, today, we have organized this webinar to create awareness and provide education on listed derivatives to the participants. Please take note that futures and options trading involves substantial risk due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes, and Kenanga Futures in Amberhat accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. So, today, we are fortunate to have a speaker to join for us this session. Without further ado, let me introduce to you Mr. David Lowe. As you all can see on the screen, Mr. David's here. So Mr. David Lowe is the Managing Director of Top Infinities in Amberhat, a proprietary trading firm that specializes in trading global commodities, currencies, equities, indices, and financial derivatives and markets. David has over 25 years of experience in the listed derivatives industry and has held leadership positions in futures broking divisions of major investment banks in Malaysia. David was the past president of Malaysian Futures Brokers Association from 2018 till 2019. So it's our pleasure to have got David with us on the webinar titled, Are You Positioned for the Coming Commodity Bull Run? In this webinar, if any of you have any questions, please feel free to drop in the chat or use the Q&A button on the top. So I'm going to pass it to David. Over to you, David.
Thank you, Ashok, for that fantastic introduction. Okay, I'm going to switch the sharing to my slides. Okay. Right. Yeah, please let me know whether you can see my slides currently.
Yeah, it's loading.
To go.
Yep, good to go.
Okay. I'm going to start. Okay, so welcome again. Sorry for that disappearing for a short while. To this interesting topic that we'll talk about, are you positioned for the coming commodity bull run? Okay, what bull run you may say? Okay, so let's go in and talk about this exciting topic. Okay, hold on. So you see a disclaimer page, right? Ashok's already done his disclaimer. Basically, from this particular slide, if you can speed read this, basically this presentation is for general information. If you want to do anything from the ideas that you see here, please talk to your registered and licensed futures broker from Kenanga, and they can help you to execute any ideas that you want to from here. Okay, so let's move on. That's me. Ashok has already introduced me, so I shall move on as well. So this is what we are going to cover tonight. Okay, you shall see the webinar session agenda. Now, we will talk first about the insights in the recent trends and the dynamics driving the commodity markets, right? And looking what's happening. Why are some commodities going up to new highs? Why are some commodities not doing so well? Okay, but are generally commodities going into a bull run? Okay, that's the question that we want to answer. And if we see the trends, how do you take advantage of these trends that you will see as presented later? Right, so we look at some of the strategies that we can use, especially using the CME suite of commodity futures contracts. Right, so let's move on. Okay, what you're going to see here is the year-to-date performance since last Friday of all types of asset classes. Okay, this is year-to-date performance. The chart, if you see the green part are the gains. The red parts are the losers. Okay, and I've kind of highlighted here what are the top performing commodities or asset classes. And you can see right here that crude oil, copper, gold, and silver are making double-digit gains. Okay, I'm not even mentioning the top two there. Okay, which is cocoa and orange juice. These are the top commodities so far. Cocoa have gained 123% year to date. Orange juice 50% year to date, okay? And then followed by silver, copper, coffee. You see, coffee, why your cup of coffee is more expensive. Coffee has gained 20% this year to date, okay? And then we have two well-performing indices, actually, Nikkei and the Euro Stoxx 50, and then, of course, followed by the energy, Brent, WTI, and gold. So these are the, as of last Friday, okay, top performing, what do you call that, asset classes. Okay, right at the center, of course, very flattish are some of the other commodities, right? And then you have what do you call that? Of course, bonds are not doing that great. Okay, and you also have some of the things like soybean oil. Okay, for those who are trading the Malaysian market, especially palm oil, you'll be very familiar with the soybean oil. Currently, soybean oil is not doing that great. It's down about 8.7%. Okay, so these are basically a snapshot of the whole asset classes performance year to date. Okay, and what is interesting, I think, to note here, since we are talking about the what do you call that, the performance of especially those top two, cocoa and orange juice. Okay, when you are trading in commodities, one thing to look to is, of course, the weather. The weather is one very, very important what do you call that, factor in terms of looking at the trends. Okay, and weather is always a wild card. You don't know when it will hit. Okay, so for cocoa and orange juice, basically they're gaining because of the bad weather in those areas that they're planted. Right, cocoa in West Africa, the weather is very bad over there, so they are not getting very good harvest. In terms of the production of cocoa, is getting less. Orange juice as well, hit by weather and also by diseases of orange trees, right? So in terms of looking at what do you call that, later we'll look at some of the factors affecting commodity prices. But don't forget that one of the big factors in terms of commodity trading is the weather. Okay, so if weather were to be bad or unfavorable for certain types of crops or certain types of plants, then you find that you have a short supply or lack of production, and that will affect prices in a very, very big way. Okay, just to take a note while we are talking about the commodities. Okay, let's move on. Okay, in terms of talking about commodities, okay, so commodities basically made quite a big, what do you call that, a climb since the pandemic. Okay, as you can see right at the bottom in 2020, of course, commodities struck a low. Okay, and then from there climbed up to a high of 845. What you're seeing here is what we call the S&P Goldman Sachs Commodity Index Futures chart. Okay, it's actually a tradable index on commodities on CME, right? This is tradable, and you're looking at a monthly chart right over here, and I've marked here the high in March of 2022, where the index was at 845. Okay, and there was another high you can see right over here, which is 888.5, and this high was made in the commodity super cycle in 2007 2008. It peaked here at 888.50, and as you can see right over here, the rise from the pandemic lows actually came very close to the previous high in 2008. And whilst these commodity prices was climbing in the years of 2021, 2022, everybody was talking about a commodity super cycle. Okay, and of course, after March 2022, markets corrected steeply, right? And came down to this level at about 525. And now currently what it is doing is it's formed a bottom, okay, actually a double bottom. Those of you who are inclined to technical analysis will recognize this formation somewhat like a double bottom. Okay, so the question is, has the global commodities found already a bottom? Okay, so we may take some hints here. Okay, a double bottom is, of course, a very significant formation in terms of the support for the markets. And currently, markets are turning up in terms of the chart right here. We will dive deeply into the chart later. going back to the GSCI chart, and we'll see what's happening and what's the reading on the GSCI chart. Okay. Meanwhile, this is the situation now. So let's move on. Okay, so we want to see this question: is the commodity bull awakening? Okay, and what you see right here is a couple of 6 charts of the basically the energy commodities. Okay, you can see crude oil, Brent, gasoline, heating oil, natural gas, ethanol right over here, right? And the question is why? What is keeping commodity prices at the elevated level? Okay, everybody's saying that economies are not doing that great. Okay, so why are commodity prices elevated? Okay, and there's actually a few factors, as you can see here. Okay, number one, all these elevated prices are basically because of supply constraints. Okay, supply constraints are currently supporting commodity prices. Okay, demand may not be very, very huge yet in terms of overall global economy, except for a few very, very special situation commodities like what we saw just now, cocoa and orange juice, okay, because of the weather. Okay, so supply constraints. Weather is also a supply constraint because production cannot go up because of the bad weather. Okay, number two is the underinvestment. Okay, especially for copper. Okay, under investment due to uncertainties. Okay, the last couple of years have been quite tough in commodities, so investors are less willing to put a lot of what they call that capital expenditure into what they call that the facilities or the infrastructure to do mining or to do commodities. Okay, and especially for copper. Copper is basically one of the highly demanded metals in terms of the move for green energy and the global energy transition policies. And it uses a lot of copper. Okay, to build the infrastructure, okay, to build the EVs, you need a lot of copper. So copper has been what they call that rising because of this green energy and global energy transition policies. The other thing, of course, is the geopolitical developments, right? You have conflict in the Middle East, okay, and conflict in Russia and Ukraine, okay, and all these geopolitical uncertainties, people basically run to buy gold, right? In times of uncertainty, people buy gold, okay, and of course, the oil supply, okay, there are fears of oil supply, what do you call that, in the Middle East because of the conflict there. So oil is also being elevated in terms of the prices. Okay, so climate change we saw just now and the global weather conditions that cause cocoa to be rising. Right. In the next page, we will see corn, soybean meal, oats, okay, roughly the soft commodities and the grains, okay. Now, as you can see from the monthly charts here, most of these soft commodities or agriculture commodities have come to a low and finding some support, okay. You look at corn, okay, it's basically like turning up, okay. So for soybean oil, oats as well, it's kind of like found a bottom. So the question is this a great time to get in, okay, for the next run? Okay, so we'll attempt to answer this question in the slides that are coming in. Okay, so let's look at it. Okay, let's look at the key fundamental drivers driving the commodity markets. Okay, so in one page you see the most important drivers. Okay, and this, as you look at these particular factors like conflict. Okay, the conflict in Middle East, the conflict in Russia, Ukraine. Okay, and potentially even conflict in China, Taiwan, we don't know, but there's been a lot of talking about things. Okay, things are heating up. Okay, so all these potential geopolitical risks or geopolitical developments, okay, has a big factor in terms of the price volatility ahead, and also the prices for the commodities. Right. The other thing is inflation, and this is something that we will talk about later, looking at some of the numbers from the US inflation numbers, because inflation is also a factor where the Federal Reserve would have to make their policies in terms of the interest rates. Okay, so that interest rate has also a fundamental driver in terms of commodity prices. Why? Because that affects the US dollar. And the US dollar has a very close relationship in terms of the with commodities as well. So global economy, of course, okay, is the global economy recovering, okay, or is it going to go into recession? Okay, those are the factors again that will drive the commodity prices. So let's go in and look at each of these factors. Okay, let's look at it. So as a trader, if you're looking at trading commodities, you basically need to look at the bigger picture. Okay, and I'm showing how I analyze when I do trading as well, how I analyze the markets. Okay, I look at the big picture, which are all these factors, and then later go into the charts to look at the timing for the trades. Okay, so let's go on. Okay, let's quick look at the US inflation number. Okay, this is the latest number coming in April. Okay, the US inflation rate has actually come off slightly, retreating to 3.4% from 3.5% in March. Okay, as you can see here, this is a a chart of the last 1 year, right? You can see that it's actually come off, okay? But then it stayed in the 3.4, 3.5, 3.4 level, okay? So in terms of looking at the inflation numbers, okay, the 3.5 in March is actually the highest reading since September of last year. Okay, so in terms of looking at the inflation numbers in the US, they're still kind of sticky. Okay, not going down to where the Federal Reserve or where the US wants it to be, which is around 2%. So we roughly still at the 3.4, 3.5% level. Okay, so in that sense, the Fed is looking at these numbers very important in terms of what is the interest rate decisions that they will be making, whether to cut rates or to maintain rates or to hike rates. Okay, so that has been the story since last year. Last year there was a high prospect, okay, because of the downtrend in terms of the inflation to have a rate cut in June, and that's not going to happen. Okay, as we shall see later. Okay, let's move on to the second chart. Okay, another thing to look at is the US unemployment rate. Okay, and this is very important. The labor markets in terms of the Federal Reserve, one of the considerations by the Federal Reserve in terms of their interest rates, they look at the labor markets. And in terms of the latest number coming up in April, okay, the unemployment rate has edged up to 3.9%. So this is cooling off a bit. Okay, it's actually cooler than the expected 3.8%. Okay, so in terms of this, the labor market is basically giving signals. Okay, and that is cooling, right? And it basically raises the optimism that the U.S. central bank could actually engineer a soft landing for the economy. Okay, so with that number that came out from April, the financial markets were basically boosting the odds of a September rate cut. Okay, it raises the hopes that there'll be a rate cut in September. Okay, this is the US core PCE annual change. So this number is very important. Okay, this PCE, which is the personal consumption expenditures number, okay, measures the consumer spending in the US, and this is the Fed's favorite inflation gauge. Okay, whether to raise rates or move rates will highly dependent on this very closely watched PCE number. Okay, the PCE number is going to come up this Friday. Okay, so watch out for that. Currently, the consensus is 2.8%. Okay, for the April PCE number. Okay, basically mimicking the last 2 months figure, right? And this is something that any particular what do you call that numbers that come up will have a big what do you call that factor on the U.S. Federal Reserve decision. Okay, so but it's staying at 2.8%, right? So in terms of the current reading at 2.8%, basically for the near-term rate cut, the odds are very slim. Okay, that's what it's saying. Okay, so if April consensus come out at 2.8 and the numbers come at 2.8, then basically you won't have any rate cuts earlier than September. Okay. Now, in terms of looking at whether the Fed is going to cut rates or hike rates, one of the very good tools to use is the CME FedWatch. Okay, so if you want to know what traders are thinking about the rate decisions, okay, from the Federal Reserve, go to the CME FedWatch tool. You can Google CME FedWatch, and it tells you, okay, for each of the individual meetings. Now, this chart here is the 12th of June meeting, which is coming up, okay? And basically, you can see right here on this particular date, as of 26th of May, 99.1% of the traders feel is reflecting the view that the rates will stay at 525, 550 levels. Okay, so no change. Okay, no hike decision in June. Of course, that a lot of people know that already. Okay, and we move on to also the 31st July. Next meeting after June is the 31st July. Okay, so 88.9%. Okay, almost 90%. Okay, believe. Okay, that there will also be no chance of a what do you call that a cut in terms of the rates over in July. Okay, so this is a great tool. Okay, the CME FedWatch. Okay, that you can use to gauge what you call that the sentiment. Okay, of the Federal Reserve in terms of what the traders think. Right. So go and go into FedWatch. These numbers changes all the time. Okay, so it's you need to go in and look at it every day. It changes. All right. Okay, so let's talk about the dollar, right? The dollar is a very important determinant of commodity prices. Okay, so if a very strong dollar may set the commodity prices, because in terms of the prices of commodities, which usually in price in dollars, if dollars is very strong, then things will be expensive in terms of the US dollar, right? So dollar has actually traditionally had a inverse relationship with commodity prices. Okay, but lately, things have changed somewhat. Okay, now here is what you see is a chart of on the top panel is a chart of the DXY, which is the US dollar index, and the orange colored one is the GSCI. Okay, the GSCI is what you saw just now, the monthly one. Now this is the weekly one, and right at the bottom panel is the correlation coefficient of these two dollar index and also the Goldman Sachs commodity index. And you can see right here, okay, in the last 6 months or 8 months, it's actually had a positive correlation. Okay, the correlation is close to 1. So it is a strong positive, what they call that, relationship. Okay, which is actually traditionally is inverse. Okay, if you look at right at the bottom here, in 2014, 2015, it had 2016, it had an inverse relationship, right? So as dollar rises, commodity prices will fall, okay? But these days, they are both rising together, okay? So there are a lot of external factors impacting the commodity prices and not only just the dollar, right? So this is basically what it's saying, right? So don't jump to the simple conclusion that a strong dollar will impact and commodity prices will come down. Okay, these days the relationship have changed somewhat, and you can see post pandemic in 2021. Okay, most of the months, most of the weeks, it has maintained a positive correlation. That means as dollar rises, commodity prices also rise. Okay, so this is something that we need to note. Okay, it's traditionally has been inverse, but not lately has not. Okay, so let's look at the key drivers, which is the global economy, right? So in terms of looking at the IMF report, the latest IMF report in 2024, April 2024, talking about the world economic outlook, these are the key themes. Basically, the IMF is looking at the global economy growth of only 3.2%. Okay, it's going to be also 3.2% this year and next year. Okay, so it's going to stay there. Advanced economies, basically, there's a slight rise. 2023 up to 2024, there's a rise, and also 2025, they've projected a rise. Okay, and in terms of emerging markets and developing economies, it's quite spotty, right? So basically, there's going down in terms of 2024 and 2025. Okay, so there is a spotty what you call it growth in terms of the emerging markets and developing economies, but in advanced economies, they expect the next 2 years to have a slight rise. Okay, the key themes from the IMF World Economic Outlook is basically this. Okay, the IMF sees the global economy remaining resilient. That's the theme. Okay, steady but slow resilience amid divergence. Divergence, that means the what do you call that? The recovery is not even. Okay, so the first thing in the divergence in growth, US has basically recovered above the pre-pandemic trend. Okay, whilst the rest of the world, okay, across different economies, some are still struggling. Okay, they are struggling to recover from the pandemic and also the rising cost of living. Okay, so it's very uneven in terms of the growth for different parts of the world. Okay, they see that inflation is moderating. Okay, they feel that the headline inflation, seeing it declining from 2.8% end of 2024 to 2.4% end of 2025. So they basically see inflation coming down. Okay, but one of the key points is China's recovery continue to weigh on growth. Okay, affected by the contraction in the property sector and also its own domestic demand is very subdued. Okay, there's very poor domestic demand. Okay, and this is one of the worrying factors. Okay, but of course, if you have read and followed the news, okay, and later we'll see China has done something very big in May, okay, last week, and issuing those bonds. We will talk about that shortly. And China is already taking steps to make sure to arrest this problem. All right. So the risk ahead, basically in terms of the IMF, they see basically the geo-economic fragmentations. Okay, basically the countries in the world are breaking up into kind of gangs. You can say in simple term gangs. Okay, so into blocks. Okay, so each block has its own interest. Okay, and taking care of its own interest, and this creates inefficiency and actually damage to the global cooperation. Okay, so IMF observed this fragmentation continue to grow. Okay, and this has also because of the geopolitical positions of certain countries or certain areas that have caused this to happen. Okay, so as far as the IMF, these are the key themes. Okay, you can download the full report of it's a very long report, the IMF April 2024 economic outlook. It's a very interesting read. Okay, I encourage you to go and have a look. Okay, the other key drivers, we talk about China because China has always been the one of the main drivers in the global economy, right? So let's look at the health of some of the data coming out of China and see what's happening in China. Now, in terms of exports, okay, the April numbers came in, and actually the exports increased to a 3-month high. So that's very encouraging, right? In terms of some of these green shoots, I can say, right? China economy last year was expected to recover after pandemic was lifted. Okay, those expectations perhaps were dashed. Okay, because of the internal property situation. Okay, the collapse of the property market. Okay, has a big factor in terms of the China situation and the Chinese economy. Okay, but what we are seeing is some green shoots, right? So the exports up in the 3-month high. Okay, what about imports? Okay, now imports actually decreased in April. Okay, and this is, of course, we talk about the domestic consumption has been quite weak. Okay, so imports have stayed around the 220 billion level. Okay, for the last about 1 year, right? So imports are basically right there. Now, this is a very important number, which is the China manufacturing PMI. Okay, so in April, we saw the China PMI grow the fastest since May of 2023, and this is very encouraging, right? Now, this China manufacturing PMI, how do you read it? Okay, it's an index with a center line at 50. Now, if the numbers come in above 50, that means it's growing. Okay, so for the last 6 months, the PMI, okay, have notched up the figure above 50. So you have six straight months of growth in terms of the factory activity, and this is the fastest since the February 2023. So these are good signs. Okay, so can China come off a bottom, right? If it's able to solve its property issues, okay? So this is a very important point. Certain aspects of the economy, we see some green shoots coming out, okay? So this is something that we track, okay? You can track these numbers, the PMI, either through trading economics. I suggest you look at trading economics. It's got all the China indicators. It's a great website to go in, and you can get all those numbers on how China is doing, right? So very encouraging in terms of the PMI. Okay, so basically saying that the new orders are rising. Okay, most and foreign sales are expanding at a very fast pace. Okay, since 3.5 years. Okay, so these are some green shoots that we're seeing in terms of China, and of course China in Friday of last week, 17th of May, okay, announced that they will be issuing 1 trillion yuan bonds. Okay, these are ultra long special treasury bonds. Okay, and this is basically to solve the issue, okay, of infrastructure projects and also to support the economy. And this is basically a boost to stimulate the economy of China, and especially to revive the property sector, the debt-stricken property sector. And this sector is very important to revive. And China has made a very big move. Okay, this is one of the biggest move in terms of bond issuance. Okay, ultra long special treasury bonds. Okay, so we have to see with all these stimulus plus some of the green shoots that you see over there, perhaps China will bottom up, in the next half year or 1 year. Okay, so these are things that you want to look out for in terms of the things moving. Okay, so let's look at this interesting thing. Okay, this is the US yield curve. Okay, basically talking about the use of the treasuries across the different lengths or tenures. Okay, and one interesting thing about this is the US yield curve has inverted since mid of 2022. What does that mean? Okay, it means that the short-term rates, okay, are higher than the long-term rates. Okay, so in terms of a normal market, a normal yield curve, you will see that the longer term bonds would have a higher yield or higher interest rates compared to the shorter one. Okay, so it's quite normal, of course. If you compare to your FD rates, right? The longer FD rates should give you more interest than the shorter ones. Okay, but now it is inverted. Okay, the yield curve is inverted, and a lot of people look at this US curve inversion, and because the US curve inversion is a very kind of critical phenomena, and it's like an early sign of a recession will come in 14 to 18 months after the inversion. So the curve actually inverted since the middle of 2022. Right, so if you count how many months now from middle of 2022, right, if we are coming to that particular spot. Okay, if this particular yield curve inversion indicator has been reliable, then you are looking at a possible recession in the US in the next couple of months. Okay, so this is interesting to note. Okay, very important. I show you another chart. Okay, this is a chart that was extracted from the CME chief economist Eric Nolan in one of his presentations in May this month. Okay, talking about recessions, when will they happen, and after the yield curve inversion. Okay, and he gives here a table. Okay, a various table over here. Okay, in the recessions that happen in February 2020, December 2007, okay, March of 2001, and all followed yield curve inversion. Okay, and the lag time for the recession in February 2020 was 14 months. For the one in 2007, 18 months. For the March is 10 months. So basically, in terms of recessions will happen, okay, as far as this particular table is showing, is 10 to 18 months after the Fed last rate hike and after yield curve inversion. Okay, so this is kind of a very strong indicator. Okay, we'll of course have to see whether it happens in the next couple of months. Okay, because the yield curve inversion happened in the middle of 2022, and now we are already going to mid of 2024. Okay, so we will have to watch this whether this particular indicator is so accurate that it happens in the last three recessions that happened. There was a yield curve inversion. Okay, so this is something for you to watch. Okay, the yield curve. Okay, very, very important. Okay, so we've basically looked at some of the drivers: inflation, US dollar, global economy, Chinese economy. Okay, so now we're going to look at the current phase of the commodity market momentum. Okay, and we're going to have a technical outlook. All right, I'm going to share with you in analysis using the Elliott wave. Okay, that's one of my favorite tools for analyzing or forecasting the market phases for all types of assets. Okay, and just want to give you a look at this so that you understand what I'm talking about when I go into charts later. Okay, basically the Elliott wave analysis is basically talking about markets moving in a wave pattern, right? And this Elliott wave theory was founded by this guy called Ralph Nelson Elliott since the 1930s. He founded this theory in 1930s, and it's a theory, but basically because of his acute observation in the market movements of financial markets, he found out that the markets move in a very specific way. Okay, it moves in a pattern called a 5-wave impulse and a 3-wave corrective. Okay, whether it's an uptrend, okay, and this chart is showing basically an uptrend, okay, or a downtrend, it will display these types of 5 impulse wave and 3 corrective waves. Okay, so this is what we'll see, and you'll see some of the patterns when we go into the commodity charts. Okay, and you'll see this pattern. Okay, just wanted you to show it to you. Right, so in an uptrend, there'll be 5 waves. Okay, there'll be wave 1, which is an up wave, followed by a down wave, which is wave 2, okay, and then followed by the most aggressive wave, okay, wave 3. Wave 3 is the most aggressive and usually the longest wave upwards, okay, and then followed by a contraction or correction called wave 4, and then followed by the final wave 5, okay, and when wave 5 happens, okay, wave 5 usually exceeds the wave 3 high, and later we'll see some of the charts later. And after wave 5 is the last wave of an impulsive bullish trend. That's the last up wave. Then it'll be followed by 3 corrective waves, which is labeled A, B, and C. Right? This is just to give you a quick overview so that you understand what I'm saying in the next couple of charts. Okay, we're going to go into the soybean chart. Okay, let's look at the trend of the soybeans. This is the weekly chart of soybeans. Okay, and I've labeled the various, what do you call that, waves as well, right? So you could see that it's actually completed almost a full Elliott wave move. Okay, so and this colored zone is where actually the corrective move is supposed to end. Okay, and we can see signs right here in terms of the weekly chart that has found some support, and this could be probably a high confidence level to label it as a C. C is the last wave of the correction, right? And basically what is implying from this weekly chart is the ABC wave correction has completed, okay, near the lows at 1180. Okay, there is a bullish divergence. What is a bullish divergence? If you follow my cursor down right over here at the bottom panel, okay, basically what it's saying is you have prices which are coming down, but momentum is not going down. That means momentum is in a divergence. Momentum is actually moving up. You can see the lows of the momentum is continuing to go up whilst the prices are coming down. And this is the technical prediction that the particular down wave is already turning or is going to turn. Okay, it's one of the signs that technical analysts or Elliott wave analysts look for in terms of a turning. Okay, so it's come to a target zone, okay, which is near the wave 4. This is the Elliott wave theory. It's come to the target zone. It's got bullish divergence, so there's high probability that this C wave have what do you call that, elected a low at this particular level. Okay, so basically in terms of the reading, soybeans correction is seen bottoming already, so it could now continue. Okay, if it's going to make a new wave upwards, then this possibly the area where it's going to move up. All right, later we'll go into some live charts to see what is the action going on tonight in terms of the soybeans. Okay, so this weekly chart, this is a static chart. So let's move on to the daily chart. Okay, so in terms of a shorter term daily chart, what do we see? Right, so we basically see right here that it's in wave 3. Okay, this notation is wave 3, and wave 3 is, of course, as I said just now, one of the more aggressive impulse wave. Okay, so this wave is expected to be very strong because this is the third wave, right? So wave 1, from the turning right at the bottom, you had a downtrend, then it turned up, okay, for wave 1, come down to wave 2, okay, and then moved up to wave 3. Right, so basically wave 3 is basically the bulls are in the driver's seat, okay, following the wave 2 correction. So currently in terms of soybeans, the readings on the daily chart is bullish. Okay, so you can see the momentum right at the bottom here. Okay, although it corrected somewhat, but it's able to pick up its momentum and is slowly exceeding this high in terms of momentum as well. Okay, so this is something to watch for in terms of soybeans currently in wave 3. Okay, what we can say right here is after it finishes wave 3, okay, once the momentum finishes wave 3, there is a the possibility, of course, if it's going to go higher, you will have to do a correction. Okay, and normally if it does a correction, you will normally come down to where the support levels are as well. Okay, especially it will not exceed the wave 1 area, which is the 1220 area, right? So there's still possibility of some upside. Okay, but there will be a possible breather later called the wave 4. Okay, where we'll correct a bit. And then after that, then you're looking for a wave high that will exceed the wave 3 high. Okay, so let's move on. And this is the soybeans. What about soybean oil? Okay, soybean oil again has a very familiar to structure as the soybean. Okay, it's now at the ABC corrective wave section. Okay, it seems to have perhaps completed. Okay, unless there's a new move downwards, which be quite deep. Okay, currently we're not seeing it yet. Okay, so we are looking at the possibility of the same completion of the last wave C of the ABC correction. Okay, so one of the things that you will notice is a lot of agricultural, what do you call that, commodities tend to correlate in terms of their movements. Okay, so you saw just now the soybean chart weekly is now very similar in terms of the phase as the soybean oil chart. Okay, so we are looking at the soybean bear wave completing right here at C. Okay, at this particular level. Well, it's still trying to find its base. Okay, it's still trying to find its base. if this base is able to hold, okay, then we may see a new bull cycle in terms of the weekly chart. Okay, is there bullish divergence? Okay, there's also bullish divergence. Okay, right over here. Okay, so these are some indicators or some signals to say that the market could be forming at bottom right here. Okay, so for the daily chart, okay, daily chart is going through what we call an irregular type ABC correction, where it's not very, very clear. It's a very irregular kind of correction, okay, which also implying that it's trying to find a base, okay. So if this base holds, okay, around the 42.53 base holds, then okay, we are seeing that there will be a technical correction of this downtrend, and whether it can pick up as predicted in the weekly chart, whether it's bottom out at the C wave, then if that is the situation, then we can see the daily chart in the near future to be more bullish. Okay, as it is, it's trying to find a base. Okay, it's currently still in the regular ABC correction. Okay, it needs to play out of this particular area. Okay, it needs to break free from this bottom right here at 42.53, needs to hold, and then it form the upward wave. Then we'll see more bullishness coming in for the soybean. Basically now it's in the defensive. It's trying to defend its low. All right. So those of you who trade the palm oil as well, you are of course looking at the soybean oil chart. Soybean oil chart trades together in correlation with the palm oil chart as well, right? So the readings from the soybean oil chart, you can also take hints for the palm oil market. Okay, we move next to corn. Okay, corn, very interesting. Okay, can you see again the same kind of reading in terms of the weekly chart? So it's also completing its ABC corrective wave. Okay, with bullish divergence as well. Okay, so that's very interesting. You see the various different types of agricultural products. Okay, displaying the same chart and phase or momentum characteristic. Okay, so this is a ABC. Okay, it looks like a possibility of a no, it's forming. So here we have a higher high. Okay, which is very encouraging in terms of the direction of the move. Okay, so this is basically implying that the next sequence of the up wave could be starting already on the upside. Okay, this is the weekly chart. Let's move to the daily chart and see what's happening there. Okay, so corn. Okay, so basically corn in terms of the daily chart has actually moved up quite a lot from the wave 2 low. Okay, so it was in wave 3 currently. The question mark is whether it's in wave 4 or is it going to continue the momentum, right? So it's not confirmed yet whether it's wave 4 correction. Okay, because if it's wave 4 correction, then momentums usually move below the zero line. Currently it looks like a wave 4 and it's trying to recover, but we may do one up and then maybe do a correction to retest this low. Okay, so currently we're looking at a possible wave 4 correction to consolidate before wave 5 up. Okay, so always remember, when wave 4 coming in is an opportunity to look for a region to trade the wave 5. Okay, the best waves to trade in terms of the wave is the wave 1, wave 3, wave 5, and the wave C. Okay, the corrective wave C. So the wave 4 is where the traders look for positioning for the wave 5. Okay, so wave 4, although it's a consolidation, it's also in terms of looking for positioning for the wave 5, is a good wave to hunt for the low of wave 4 for the next move up, because the next move up will exceed the wave 3 high. Okay, so this is an interesting thing to understand about the different waves. Okay, if you're on wave 3, then you say, okay, possibility a wave 4 consolidation can come in. But if we're hunting for a wave 4 low, then it's a optimal place to hunt for a positioning for the wave 5 upwards. All right, so this is corn bulls in terms of the daily chart, possibly taking a breather at this current moment. So wheat, okay, what has wheat been doing? Okay, this is the weekly chart of wheat. Okay, of course, since the big rise in 2022, okay, because basically affected by the Russian-Ukraine war, because those are the places where all these grains and wheat are especially grown, okay, that area. So it raised the war actually raised prices up to a very high level. And then of course there was a spectacular collapse of prices. Okay, prices went to come back to the old base right over here. Okay, so this wave is wave three, the very aggressive wave, and of course a very deep wave four correction as well. So the question now is, has it finished its wave four? Okay, and will it go for a wave five, which will exit this high? Okay, so that's the question. Currently, it's trying to find the bottom at right at this level, the 523 to 590 level. Okay, this particular zone over here. This chart, I think today this is the weekly chart close on Friday. Okay, prices have continued to rise because weather in Russia is not good. Okay, it's very dry, so the harvest for wheat is poor. So you are seeing the prices of wheat spiking as well, right? So in terms of looking at the daily chart, where are we? Okay, currently it's in wave three. Okay, the wheat bulls are powering on. I think with the news of the weather being bad in Russia and the wheat's been affected by that, possibility of it rising further before finding a wave four. Okay, I've just written down the notation for your observation, but currently it's still on wave three, still rising, still strong, momentum still strong. Okay, so in terms of trading wheat, we are still trading the wave three bull. Okay, no signs yet of a weakening towards the wave four. Okay, but always remember, after wave three, expect some wave four, and then if it's coming down on wave four, then look for the opportunity or zone to buy up for the wave five rise. Okay, let's now look at the GSCI. I promised to come back to the GSCI and see what's on the cards for the whole basket of commodities globally. All right. So what is the current phase of the GSCI? Right. So we saw this. This is a weekly chart as compared to what you saw in the beginning was a monthly chart. This is a weekly chart. So basically, the weekly chart, you can see the bottoms here being supported around the 520 levels, right? This is the where the support is. Now, this is a wave four correction. Okay, so again, what is after wave four? Okay, the next wave after wave four is wave five. Okay, and wave five is expected to exceed the wave three high. So the wave three high was the March 2022 high at 845. Okay, and it's very close to the 2008 high of 888.5. So if this picks up from here, okay, if this GSCI if signaling what is saying that the end of wave four is already formed, then the base now has been formed for the wave five rise, and this wave five ascent will exceed the wave three high. Okay, so this is of course a very bullish picture. Okay, of the next rise, and this is where people, if actually follows this pathway, then people will talk again about the commodity super cycle. Okay, so this is interesting chart to follow. Okay, the weekly chart. Okay, and we're expecting that currently these are the start of a wave five movement. Okay, so in answering the question of whether a new bull has started, okay, in some commodities, okay, the prices have already shown very clear signs, okay, but generally in terms of the whole basket of commodities as represented by the Goldman Sachs Commodity Index is currently looking to have bottomed out at wave four, and now is the beginning of the wave five bull run. Okay, this is what the Elliott wave is saying about this GSCI chart. Okay, so after seeing all these possible scenarios, where are we in terms of how to take advantage of this trend? So let's go in and look at some of the opportunities of trading the commodities that you've seen myself presented over the last couple of charts. Okay, so look at some of the products under CME, which is the soybean oil, corn, and wheat futures. Okay. So This is the preeminent soybean futures contract called ZS. Okay, and this one the most liquid tool in terms of hedging for those involved in the soybean business. Okay, one of the world's most widely grown crops. Okay, as you can see here, this contract size is quite large. It's 5,000 bushels. Okay, this is of course a deliverable contract. Okay, don't buy this contract and totally forget about it. Okay, you can be actually delivered soybeans. Okay, of course, Kenanga won't let you do that. Okay, but it's a deliverable contract. Okay, as is most of the contracts, the commodity contracts, and especially the agricultural contracts in CME, they're all deliverable. Okay, so this is a 5,000 bushel contract. Okay, now there is a smaller contract recently being launched called the XK. Okay, XK is the mini soybean futures contract, which is 1,000 bushels. So this is only 1/5 of the size. Okay, so if you want to take part in the movement in the soybean futures, okay, just now we saw weekly charts. Longer term, we're looking at bullish scenarios of a wave 5. So if you want to take a position or you want to take exposure in the soybean futures, okay, you can also opt for the smaller contract, okay, which is the 1,000 bushels contract, 1/5 of the size of the large contract. Right, so this is the mini soybean futures contract. This recent launch from CME. Okay, so you can trade the minis as well. Next up is the corn futures. Of course, corn is one of the most liquid and active markets in grains. Okay, corn futures is basically trades over 350,000 contracts a day. Okay, very, very active. All right, actually now in 2024, the daily average volume is of 430,000 contracts traded daily. And you can see that this contract size is also 5,000 bushels. Okay, bushels is basically measure like a basket. Okay, so this is the olden days. They measured traditionally all these agricultural products in bushels, and this is about 5,000 bushels. This standard measures in terms of agriculture, right? And this one to trade the corn futures is about 1,300 US dollars in terms of the margin. Okay, this margin is the CME margin, so please check with Kenanga for the final margins in terms of trading the corn futures. US 1,003 for one contract, currently CME margins. We also have what we call a mini corn, all right? The XC. Okay, the XC is a smaller contract in terms of 1/5 the corn contract, the large corn contract, which is 5,000 bushels, and this is 1,000 bushels, right? And the margins to trade this is only US 260 US dollars to trade one mini corn futures. So it's a very how should I say, in terms of margin, a very affordable contract to try if you want to have an exposure to corn. Right, so corn has the same features we saw just now in terms of the movement. Okay, it's the weekly charts have gone to the C wave. Okay, and we're looking for the next wave up in terms of the daily charts as well. Right, so this corn. Besides corn, you can also trade, okay, soybean oil is something a lot of Malaysians are very familiar with, okay, especially those of you in the context of palm oil trading. It's one of those contracts that you will refer to regularly to see where the bean oil prices, because it's highly correlated, okay, being both vegetable oil, palm oil and vegetable oils, being both the same category of oils, edible oils. Soybean oil is one of the favorite contracts that Malaysians trade as well. Okay, this is a major vegetable oil futures contract of the world. Trades about 196,000 contracts a day. Okay, this is a large contract. It's 60,000 pounds. Okay, this is a large contract. Now, let's talk about wheat. Okay, wheat has been moving up in a very, very nice trend. This contract, Chicago wheat, allows you exposure in 5,000 bushels of wheat. You can see the measures are all quite standard, right? 5,000 bushels, corn, soybeans, and even wheat. Okay, this is Chicago soft rate wheat futures, okay, which is the global industry's price standard and one of the most actively traded wheat benchmarks in the world. Right, trades about 153,000 contracts in a day, so very, very active. Right, to trade these margins around 2,000 US dollar. Okay, and we also have a smaller contract, the XW, which is the mini Chicago SRW wheat futures. Also 1/5 of the large wheat contract, okay, only 1,000 bushels. And the margins to trade this is, of course, 1/5 is only $400. And you can get the action, okay. Of course, wheat now is very, very what I call that, the bull trend is very, very strong. You can get action in this using the XW mini wheat futures contract. Okay, so this is a great way for those of you who haven't tried trading commodities. Okay, all these mini contracts are a great way to get in and test out the waters and get an exposure in the next trend for the commodities. Okay, I'm going to feature you a very interesting contract. Okay, live cattle. Okay, this is seldom seen. Okay, but it's a. Later I'll show you the live cattle chart. It's also on a bull market. Okay, this is talking about 40,000 pounds of cattle, live cattle. Okay, very interesting. So live cattle is one of those contracts traded on the CBOT CME. Okay, margins is about $2,450 to buy 40,000 pounds of live cattle. Very interesting contract. Okay. Later we'll look into the charts and see what's happening in live cattle. Okay. This was a special request to feature. Okay. It's a very interesting contract that you may want to look at the trends. It's available on Kenanga for you to trade as well. Okay. Live cattle, very, very interesting contract. And we'll jump into the live charts before we go to Q&A to see some of this action. Okay. So what I'm going to do now is to switch to my browser. Okay, so hang on there while I stop sharing and then go into the browser. Okay, I'm going to share my browser. Okay, I hope you can see my browser now. It will come onto your screen in a short while. Okay, I hope everybody's seeing this. Okay, what you're looking now is the soybean
We can
futures
see,
chart.
David.
Thank you, Ashok, for that. So soybeans, okay, we see currently soybeans is the daily chart. Okay, this is now what you saw. Okay, now it's attempting to break. There's a double top here, so it needs to take out this double top around the 1256 level. Okay, it's currently quoting 1241. It's trading around here. It's consolidated for the last 1 week. Okay, so basically to see whether it can test this particular high, right? If you test this particular high and break through, then you will follow through for the next phase of the wave tree. Okay, so daily soybean again is on wave tree. So wave tree is basically a good wave to trade or a good uptrend to trade. Okay, traders love the wave tree, and this is where you get the strongest move. Okay, but remember, after wave three is completed, okay, once it's achieved its target, okay, there'll be a consolidation. And those of you who want to get back onto the bull trend, then look for a wave four consolidation. Okay, usually the wave four consolidation is a 50% retracement of the wave three length. Okay, so for those of you who know Fibonacci, okay, if the wave three has ended, then you look for a 50% or 61.8% retracement. That is the zone where wave four will usually land. Okay, so if you are long, you want to look for long positions on soybean, and now in wave four, then you look for that zone to see any buying signals in that zone. Okay, so this is the daily. Let me just go into the live chat and see what's happening right now. Okay, let me just reset. Okay, you basically see that it's a kind of in a sideways trend currently, right? It did a few tests right up here, but didn't close above this particular line. So I guess around the 1252 levels is crucial. Okay, it needs to be able to transcend that to continue the wave three. Okay, so basically in terms of the hourly chart, it's now very flattish. It's trying to look for a direction. Okay. So now let's move on to have a look at, okay, I promise you the live cattle. So let me show you before we forget. Okay, this is live cattle. Okay, live cattle, reset the chart. Okay, this is a weekly chart, and you can see live cattle. Wow, my God, it's been on a bull market since 2020. You know, since pandemic, the price of live cattle have continued to go up. Okay. Of course, these are again things like supply constraints that has made this market a very, very strong bull. Okay, pardon the pun. Okay, but yeah, these are things in terms of post-pandemic. A lot of underinvestment and a lot of facilities and infrastructures have not come up in terms of the recovery. Okay, so live cattle, this daily chart, let's look at daily chart. Okay, daily chart, yeah, it seemed to have come off. This is wave 3, okay, coming off right over here. Okay, this you may see, okay, okay, this is an uptrend right here from April onwards last month. Okay, let's look at the hourly charts and see what's happening. Okay, the hourly charts is also quite bullish at this point. Okay, momentum is still good. Okay, we're looking at still some potential rises in prices. Okay, so hourly is in the wave 3. Okay, this is wave 1, wave 2, this is wave 3. All right, so that's live cattle for you. Okay, meanwhile, as I go through the live charts, if you have any questions, please post it up at the chat or at the Q&A section so that I can take any questions that you want to ask. Okay, let's go back to wheat. Okay, where's my wheat? Let's see. Let me find my wheat. My wheat has gone somewhere. Never mind. Let's go to the other one first. Okay, let's look at corn. Okay, just to get updated from the charts. Okay, so corn, we're saying that perhaps wave 4, but wave 4 has not been confirmed, so we're still on wave 3. Okay, potentially still upside. That's what it's reading. Let's see the hourly. Anything interesting? Okay, hourly. Um, Still on an uptrend channel. You can see uptrend channel right over here. The down channel here. Sorry, the lower, the higher lows and the higher highs. Okay, is still on an uptrend channel. Okay, see whether it can find support around these moving averages, right? So currently in the shorter term, there's some correction. Okay, let's see whether it can be supported along these moving averages, right? This is corn. Okay, corn still upward bias in terms of the chart. Let's look at soybean oil. Okay, soybean oil is high interest by Malaysian traders. Okay, in terms of the shorter term charts, hourly. Okay, hourly still looking at some consolidation. Okay, but perhaps some signs of a technical correction upwards from this downtrend. Okay, we'll have to see whether it can gain stronger momentum. Okay, to clear this. Okay, it's just at the very beginning. It hasn't really signaled that it's very, very positive yet. Okay, but the last couple of hours, of course, been positive, but it's basically coming off from a downtrend channel. So this may meet some, draw a trend line right over here. You may see some resistance right over here. Okay, so soybean
No. David, are you still there? Hi everyone, just give us a few minutes. I think there's just some lag. Let's just wait for David to get back.
Okay, are you hearing me?
Oh, David's back. Can you hear us now, David?
Oh, yes, I can hear you now. I disappeared for a while. Okay,
Okay,
but
perfect.
luckily my soybean oil
No
chart didn't
worries.
disappear, right? I don't know. It just knocks off. Sometimes the connection. Sorry about that. Right. So yeah, this is the soybean
Yeah.
oil chart we spoke about. The hourly is showing some positive signs. So we need to have a stronger surge upwards before it goes get out the woods. Okay, sun is still basically caught in this downtrend channel. All right, so yeah, we can get to questions, Ashok, and if you have any questions or the audience have put any questions, I'll be very happy to answer your questions now.
Okay, cool. So first of all, thank you so much, David. I think that was really good. There was a lot of insights that you've shared with us. You all can react towards how you all feel about David's reaction. But there is one. There's a few questions here. Let me
Mm,
just read out to you, David, and let me know if you could hear them clearly. No?
mm,
So the first question is, in terms of soybean oil and crude palm oil, how do you trade the correlation on intraday chart? That's number one. The second one leading up to it is, which commodity is leading as the trading hours of soybean oil is much longer than crude palm oil, which is characterized by price gaps?
mm. Thank you for that question. Great question here. Okay. I also trade the crude palm oil, crude as well. So I look at soybean oil futures, what do you call that, as a guide as well. So in terms of who leads who, it depends. Okay, it's kind of like take turns to do that. Okay, so very hard to say. Let's say, for example, if I overlay a let me overlay a chart over here. Let's say I overlay a FCPO chart right here. Okay. This is that let me see. Yeah, this is a FCPO chart. Okay. Um, so if I overlay it here, you can basically see. Okay, then I put this chart into, yeah. So in a way, at certain points, the soybean oil have made highs. The CPO has not. Okay, and then the CPO bottoms out here, and then only soy oil bottoms out. Okay, so it's kind of very difficult to say on the intraday basis. It's an hourly chart. Okay, to say which one leads each other, but they are highly correlated in terms of their movements, right? When active markets, okay. But of course, overnight, as the soybean oil trades later into the night, okay, you will form the opening for the morning session CPO, okay. So that's why a lot of the gaps happen in the morning. Because CPO, of course, opens late at 10:30, right? And also because CPO will also take a clue from the Dalian markets, from the China markets. Okay, perhaps reacting closer to what the Dalian markets are doing. So in terms of looking at trading palm oil, you also have to look at the Dalian prices. Okay, besides looking at the CBOT prices. But in terms of the overnight volatility, when we open in the morning, a lot of it is basically the overnight soy oil markets. What has it done, and also the Dalian opening? Okay, because the Dalian markets will react faster in terms of reacting to the overnight soybean oil prices. Okay, so there isn't a very clear lead. Okay, but they're very close. Right, they're very close. So this overlay basically you can see where the highs and lows are and which one came in faster. Okay, I hope that answers the question. Okay, but keep your tab both also on the Dalian prices. Back to you, Ashok.
Thanks. Thanks, David, for that. I hope that answers that question for Jason. If you do have extra, just please feel free to drop it on the chat again. There's another question here, David, that says, what are the key factors that drive correlations between different agriculture commodities? And how do traders account for these correlations when executing arbitrage strategies?
Okay. So if you're doing arbitrage in terms of what do you call that, relationships between different types of commodities. Now, one thing you notice as we displayed the different types of agriculture commodities, right? Basically, all of them move in very similar fashion. Okay. Now, if you're looking to trade relationships, perhaps even trading, say, bean oil, palm oil kind of relationship. Okay, and as you say, the question, the first question by Jason, right? So sometimes one leads the other, but both would have to correlate in a certain way, right? And as we've seen, soybean oil, corn, except for wheat of a bit drastic in terms of the drop. Okay, most of the major commodities in the US, okay, they are following the same phase, right? So if you're taking to trade a relationship like bean oil, palm oil, okay, those are very popular commodities to trade in terms of if you feel that it's gone out of the normal relationship, okay, then you will sell the more expensive commodity and you buy the cheaper commodity and hopes that the relationship will come back to the mean again. Okay, that's how you trade the relationship. So you would have to, of course, put up that chart, okay, together and see what's the relationship and what is the trend as well. Okay, so sometimes some of you also do trade spreads, okay, calendar spreads, okay. So calendar spreads also is something of a relationship within that same commodity, but different months, okay. You can also trade that a relationship, and also those relationship also relate in terms of, okay, the timing of the commodities, the timing of the harvest and all that, and different pricing for different times of the year. Okay, so some traders trade that, those seasonal relationships as well. All right. I hope that answers the question for the gentleman or lady. Back to Ashok.
Thanks, David. Yeah, thanks for that. As for now, I don't think we have any more questions, but let me just give a few minutes to see if anyone else has anything else maybe they've missed out on, if they forgot to put it in the chat. Let me just screen through it. While screening through it, just to let everyone else know here that for the participants, we will be conducting a virtual trading game in after this. So there's a link in the chat for you guys to register, and then you can participate in the simulations. At the same time, I don't think there's any other questions, David, for now.
Cool.
Okay, I think there's none for now, but if you guys do have any questions, please feel free to drop us an email at futuresmarketing@kenanga.com.my, and then I can pass the questions to David, and then we can get back to you if there's any as well. Okay, thanks, David. Thank you so much. We will now proceed to the next one, the next session. Next, we have a quick trading simulation session. As you can see, the link is on the meeting chat. You guys can go in and participate in that. So I'm going to pass it on to Naili. Yeah.
Hello everyone. Hi. I hope you can see my screen. Okay, so it's just gonna be a quick gaming session. I've put the link for you guys to register to our KVF trading simulation website. Go ahead and register first, then we will start the game by 9:30. So before that, my name is Kunaili, and I'm the sales and broking retail executive. Kenanga Futures have a Telegram channel where you can get our daily updates on the derivative market. Feel free to scan the QR code to join the Telegram group. and also the game sessions. So this is the link, the QR code for you to go to the website and register, or you can also refer to to the chat. I paste the link there as well. Feel free to join our game session. It's gonna be a quick one, around 10 minutes, then it'll be done. If you guys have already registered to our KFVT, I will give the instruction on how to join the game later. If you have any questions on how to sign up to this KFVT, drop us a chat and we will assist you accordingly. Okay, I can see people joining already. There's 2 joining. We will start the game at 9:30. So yeah, if anyone have trouble to sign up, do let us know. There's 3 people now. We will start the game at 9:30. Yeah. Change of plans. We will start it at 9:25. So quickly sign up and join the game. So those who don't know how to join the game, you will let me restart it and assist you. Okay. I will sign up first. You will be directed to this link, this web page. You can, if you don't have account yet, you can click sign up. But I already have account, so basically I will log in and put my password. Oh, sorry, I forgot to share. Wait a minute. Okay, let me do it again. Okay, I hope you guys see my screen now. So once you click the link or you scan the QR code to our KFVT, they will direct you to this web page. So you put your email and password if you already have account with us. If you don't, then just click sign up and then just fill in your details up. Then click sign in, go to private game, which is down here, private game, and then you scroll down. You will see webinar 28 May 2024 QM. You click join, they will ask for the password. The password is capital letter QM 2024. Enter. So the password is here. Capital letter QM 2024. So once you click join, you will see this sections. We will start it in 1 more minute, so you can sign up and join our game. What is the username? The username, you put it yourself. The username should be your email, whichever that you register. Is that okay for you, Yi Yan? Okay, I think we will start the game now because it's 9:25 already. My internet is a bit slow, so you will see loading, but those who participate already can start the game. Good luck and have fun. We're almost done with our game. 2 more seconds. Okay. Game have ended. I cannot show you on my screen because I'm having issue with the internet, but you can see it now. So game has ended. Uh, thank you to those who participate. So here's the rank. Uh, our winner is RCT Chan, Adamantium, Harith, Snorlax, and Chiao. Thank you for participating. There's no gift for these sessions. I hope to see you guys in the next session. Maybe we will be able to provide some gift for you guys who participate in the game as well. So that is all from me. Thank you guys. See you in the next webinar.
Thank you, Nelly. And thanks everyone for participating and coming for today. Should you guys have any further queries, please feel free to drop us an email at futuresmarketing@kenanga.com.my. We appreciate you being here today and hope that you guys enjoyed the webinar tonight. Take care and have a great week ahead. Bye bye, everyone.